Strive Inc., trading on the NASDAQ under the ticker ASST, is currently priced at $10.05, reflecting an intraday gain of just over 2% as of 11:24 a.m. on February 6, 2026. While this move may appear modest on the surface, it masks the deeper structural changes that have reshaped the company over recent months. At first glance, some traders see today's price action as a simple tech-adjacent bounce. In reality, Strive has undergone a fundamental transformation. The company has shifted away from being viewed solely as a niche asset manager and has emerged as a Bitcoin treasury-focused business. This evolution has created a sharp divide between those who still see a struggling small-cap stock and those who recognize a rapidly expanding balance sheet tied directly to digital assets. Initially, expectations were that Strive would remain centered on corporate governance and traditional asset management. Instead, it now resembles a smaller, more agile version of MicroStrategy, using its balance sheet strategically to accumulate Bitcoin. This shift has significantly altered the way the stock should be evaluated. Recent order flow indicates institutional buyers are actively defending the $10 level. This follows the company's completion of an upsized and oversubscribed preferred stock offering, the proceeds of which were used to eliminate nearly all debt associated with recent acquisitions. The volume surges observed earlier in the week were not random retail activity. They reflected a major rotation by larger market participants reacting to the retirement of approximately $110 million in high-interest liabilities. For a company of this size, eliminating more than 90% of its legacy debt in one move dramatically changes the risk profile for common shareholders. Despite this, volatility remains elevated as the market continues to struggle with valuing a hybrid business that combines asset management with a growing Bitcoin treasury. Institutional positioning has been uneven. Some longer-tenured funds have reduced exposure, while newer players have entered aggressively, focusing on volatility and treasury growth. Insider activity has also drawn attention, with senior leadership purchasing a substantial number of shares at prices below current levels, signaling strong internal confidence in the company's long-term strategy. Strive's business model remains controversial. Some investors believe the stock is discounted due to political associations, while others argue it is simply overlooked because it does not fit neatly into a single sector classification. At its core, the firm challenges the modern asset management framework by prioritizing financial performance over ESG-driven mandates. Through its ETF offerings, including energy-focused products, Strive has attracted investors who felt marginalized by ESG-centric investing. However, its recent acquisitions and aggressive Bitcoin accumulation have repositioned the company entirely. Strive now holds more than 13,000 Bitcoin, placing it among the largest public corporate holders worldwide. This makes AST a high beta proxy.